Just when we thought we didn't have to think about it anymore, September rate hikes are back in the picture post-Jackson Hole. But our next guest says the Fed may have ulterior motives to raise rates. Joining me now is the Chief Investment Strategist for MoneyMorning.com, Keith Fitz-Gerald. Keith, thanks so much for joining us.
Good to be here. Thanks for having me back.
So September rate hikes were sort of off the table. Now they're back on. But you say the Fed may be looking at raising rates this year for other reasons, potentially a QE4, Keith?
Yeah, it's very counterintuitive to think about. However, it makes a lot of sense when you really take off the rose-colored glasses and you get past the illusion of prosperity that they've tried so hard to create. Right now, you've got a zero interest rate policy with rates that have been artificially low for a very, very long period of time. The Fed can't do anything else if it has to. So if something goes wrong, if the economy derails, the election is a mess, I mean, pick your travesty of the day. The Fed has nothing left but its mouth at this point. That's why you're seeing a breaking of ranks. That's why you're seeing people like Fisher talk about having the door open, keeping the runway alive, whatever the phrases are that they're using. But what that tells me is that things are so difficult and the Fed is flying by the seat of its pants, they have to use euphemisms to describe the fact that they may have to resort to more money printing down the line. So raising rates gives them the room to do that.
Do you think it makes sense for them to raise rates this year, given the uncertainty we've seen coming out of China and what seems to be quite a volatile market here?
Well, I think that depends on two things. Number one, if you're an academic, sure, it makes sense because the models tell you to. However, the models are not real world. I would make some very strong arguments that it'd be totally irresponsible for the Fed to raise rates right now. You've got a weak China, you've got weak data, you've got a weak consumer, and you've got an American public that's been absolutely eviscerated. To me, this is the wrong time to do it. They missed the window yet again.
Now, we're going to get to gold in a second, Keith, but first, I want to talk about mining companies, and you say it might be time for investors to start pulling out a shopping list here.
Well, I think so, and it's not just me saying this either. You look at Buffett's position going into energy, you look at Carl Icahn doing the same thing. Anytime you've got history showing you a massive sale is the time you want to be buying. People say, oh, I want to get in when things are going up. But really, you don't go to your favorite department store and have a 50% more sale. You go when there's a bargain, when there's something available that you want to buy that's available at a good price. Energy is that thing right now. And mining in particular is that thing. Now, you've got to obviously have a good time horizon and be patient. But I think longer term, it definitely favors some very careful shopping in here.
All right, Keith, let's look at gold now. The metal getting a boost earlier this month on global uncertainty out of China, Europe, and the surprise equity sell-off. The metal, however, is now back down from the 6-week high it hit. Do you think gold is still a buy here, Keith?
I think that no investor today can afford to be without gold. And the reason is they want to be able to hedge the value of their bond portfolio and do some other things with it. Gold is not necessarily an inflation protector like everybody thinks it is, but it's definitely correlated to interest rates. Now that you've got a rate hike on the table, it's not a matter of if, it's a matter of when. I think it does make sense to hold gold. And whether it's at current levels or 25% below, I hope I'm smart enough. I have running lips today. I hope I'm smart enough to buy if it goes that low.
Well, before I let you go, Keith, what are you liking these days? What about oil?
Energy is very, very appealing to me for those reasons. I think that big defense contractors are very, very appealing. Obviously, geopolitical situation is complicated. I like tech in here. I think that a lot of the tech, particularly the big name companies, has got an awful lot of value that the market is not recognizing.
Keith, thanks so much for joining us on Gold Game Film today.
My pleasure.
And thank you for watching. We'll see you with a brand new edition tomorrow.